Hey out there, welcome to the Kevin Strong Show. Well, we're going to do a different video this time. So, a lot of people think they'll never have the opportunity to own a home. I'm going to go over an article that suggests 15 different ways to basically accumulate wealth without buying real estate. So, can you accumulate wealth and financial security without home ownership? I think it can be done. It does require some sacrifice and some delayed gratification. But if you're disciplined, continue to improve yourself financially and financially become more responsible and live below your means, it is achievable. And I think more people need to switch to this mindset because for the majority of us, home ownership is out of the question for the immediate future. So if you're new to the show, welcome. Start off by hitting that bell notification, considering hitting the like button if you are enjoying the content, and please feel free to leave a comment. So without further ado, we're going to slide over here and talk about this article. But before I get into the article, there's a couple of things that I'd like to discuss that kind of relates to this topic. I think a lot of people, particularly in the middle class, have a misconception about what is a good investment. So I would respectfully submit to those folks that in the practical aspect of living your life, let's say between the ages of 18 and 23, 24, you lose $50,000 to $70,000 trying to start a business, trying to invest in stocks, trying a very risky career move that's 100% commission. Let's say getting involved in the real estate as a real estate agent where you're going to be spending thousands of dollars on marketing and things of this nature. A lot of people think that's lost money. That's an opportunity cost that you never get back. I think the lessons that are learned from practical business failure far outreach, and you get a better return on that over your lifetime than anything you get getting a degree that turns out not to be worth anything. Now, a lot of people will push back and say, hey, my kid is going to get a degree in XYZ. And I know there's some specialties that it does require higher education, talking about a doctor, a lawyer, or dentist, or, maybe things of that nature. But for the majority of kids, I think a lot of them are going to school because they are thinking that that's an investment. And they don't necessarily look at it as a return on investment. So, like I said, I don't want to get too theoretical about this. Don't let schooling interfere with your education. And if I'm not mistaken, I think Mark Twain said that. The famous podcast guy, Joe Rogan, who has the #1 podcast probably in the world, he recently came out a couple months ago and said that if he had to sacrifice with all the things he has now, having a wife and having kids, he doesn't think he would have accumulated the wealth because when he was younger, he was able to throw caution at the wind and try a lot of things. The first 13 UFC events, Joe Rogan did for free. He didn't even get paid for that. So a lot of times when you're younger, that's when you take the chance. But I think the middle class has a bad habit of saying, hey, you just need to go to school because I went to school. And a lot of parents weren't really successful in their pattern. Now they're in their 40s, 50s, and 60s, and they're going to send their kids down through the same doggone pattern that they went through. If it didn't work for you, what makes your kid different? I know everyone thinks their kid's special, but they're not. They're just special to you as an individual. So without further ado, I've gotten too long on this. I want to go ahead and jump into this article because I do not want to make this a too much of a long video. So 15 ways to build wealth without buying real estate. Let's look at the #1. They're saying invest in ETFs. The investment vehicle pool money from multiple investors to buy a diversified portfolio of assets like stocks, bonds, and commodities. ETFs and mutual funds is a big, big thing for David Ramsey. There's pluses and minuses in that. The benefit for you to accumulate wealth using this strategy is you need compounding interest. So you need a lot of time. If you don't have time on your hands, and there's other things that you need to do to accumulate wealth. When I mean time on your hands, I'd say for this to really, really, really have a discernible impact on your financial security, you're probably talking about at least 10 years. Invest in individual stocks, bonds, and commodities. Now, stocks obviously can give you a lot of money quick and you can lose a lot of money. I personally like trading stocks. That is going to be my quasi backup plan whenever I decide to retire years down the road, my plan is to basically live off my investment strategy, so to speak, in the stock market, and everything I have from a guaranteed, so to speak, whether that be a pension or Social Security, whether that's cut in half or whatever. But my point is that I'll have 2 or 3 layers of income coming in, and I'm only going to be using the stock portion as basically to set up my lifestyle. Commodities, gold and silver are really good. I think the best way to optimize commodities is to buy them low and sell them high. Don't just hold on to them. I know that's the safe pattern, but there's a much, much better way to maximize and continue. You have to continue to move your money. So if you buy some silver at $18, like I did, I think it was $17 like in 2018. I think now it's worth $30. I'm not going to get into the macroeconomics of that, but it's going to have highs and lows. When I think it's really, really going to hit its high point, I'm going to sell it and convert that to cash. And then when it drops back down, I'm going to buy some more, rinse and repeat. Start a business. A lot of you know this is very, very true. You have to start a business that you're passionate about and that is practical. Something that not only did you have somewhat of a skill set for, but you have a passion for, and you've done some type of market analysis to understand it, what it takes to be successful and how long it takes for you to actually turn a profit. Live below your means. I think this goes without saying. I am a huge, huge, huge advocate of that. I've got a 2012 Honda CR-V, which over 130,000 miles, and I don't have any plans of changing that. I think a car is a maintenance problem waiting to happen. Every mile that you drive is closer to basically being put in the repair shop. Never carry credit card debt. This is one of the things that's very, very difficult for people to do because this requires you not to be in a position where you have credit card debt to begin with. So if you have a lot of credit card debt, this may be a big obstacle for you because it could take you years before you're able to erase that debt. But it is or should be a goal of you and your significant other if you're trying to accumulate wealth without real estate. Invest in your education. This is kind of an oxymoron. It says whether you're taking additional courses, earning an advanced degree, or a gratifying certification in your field, each step enhances your marketability and earning capacity. The higher education thing, I think you're more suited for taking out certain types of trades, like maybe become a licensed plumber or a licensed electrician. And even if you have a gainfully employed full-time job, having this skill set of certification and you do side jobs on the evenings and the weekend, you can command a very, very hefty salary for that skill set, provided that you have that license. So that would be a really good quote unquote side hustle. And I guarantee you to become a certified electrician or plumber is not going to cost you $100,000 or $150,000 a year, or $150,000, $100,000 or $150,000 to acquire that certification, where you're going to be spending that much over a 4-year degree. So something to think about. Negotiate a higher salary. That's market dependent. I think now people are just trying to hold on to their jobs. I think the advantage is more so set up for the employer, not the employee. So that's a timing issue. Change jobs for larger pay increases. Once again, a timing issue. Get rid of your car. I talked about that. If you can afford not to have a car note, don't have a car note. Too many people, especially in the middle class, gets fixated on materialism. And when you really think about it, the house and the car that you're showing off to strangers who don't know you and don't care about you, guess what? They're actually looking at the item that you purchased. They're not looking at you. So that's the irony of it. Those people who get fixated on self-attention through materialism, when you do garner that attention from the general public, they're getting fixated on the object that you purchased. It's not about you. You think they're looking at you. They don't give a damn about you. They're looking at the Porsche. They're looking at the Range Rover, right? They're looking at the Jaguar. They're looking at the Lexus. They're looking at the car, not the driver. They're looking at the house, not the homeowner of the house. But yet and still, some of us will stretch our finances well beyond what we should stretch it for to get some type of social affinity to kind of show people that we have it going on, so to speak. And it's really, really, really selfish and self-centered, and it really doesn't serve the purpose. So that's just my rant on that one. Invest in real estate investment trusts. So these are ways that you can invest in real estate without directly owning real estate. typically offer high dividends and potential for capital appreciation with lower entry costs than buying physical property. And they call those REITs, real estate investment trusts. Build an online business. I think this is a go-to thing. I strongly recommend anybody that's contemplating starting a business, you want it to be scalable and not physically dependent on a location. That way, if you and your significant others have to relocate to a different city or to a different state or potentially live or relocate overseas, that business is still connected to you by way of the internet and technology. It doesn't require a physical presence in order for you to generate revenue. Explore crowdfunding and peer-to-peer lending. This is basically just lending money to people. As an investor, you can diversify your investment portfolio by contributing to various projects or lending individuals in exchange for interest payments. I'm not a big advocate of it. Some people think it's the greatest thing since sliced bread. I don't really like it. Become a freelancer or a consultant. Find out something that you're really, really good at and see if there's a market for that. A lot of people are good with accounting and payrolls and things of that nature. Maybe you want to start a book, accounting book business on the side, doing payroll on the side. A lot of these companies are outsourcing that and don't have in-house employees to do that. And all it takes is a couple of accounts or a couple of clients, and you can have a nice stream of income that's not requiring a lot of your time or effort. Always invest in yourself. I am a big component of this. I've told people, I don't know how many times I've easily probably lost in terms of opportunity in real dollars, probably close to six figures in understanding investing in the stock market over, let's say, an 8 to 10 year period. But the skill set that I've developed over that period of time is worth a lot of money. And it's something that will always be with me. And I know people say, well, if you get a degree, nobody can take that from you. That's an intrinsic value. That doesn't mean shit. Excuse my language. I don't mean to dismiss it because I have one myself. But the important thing is don't let intrinsic value be anchor you down so much. You know, you're going to school to make money and you're going to school to get a return on your investment. You can't just say, well, you can't put a price on learning. Yes, you can. When you can't pay your bills, when you have a degree that's not marketable to the point where you're doing something that's 10, 20, 30, 40% below what you thought that degree was going to be worth, that's when it does matter. So don't get too hung up on the intrinsic value of education. Because at the end of the day, there's blue collar people, there's people who are doing trades that are making multiple six-figure incomes that are doing very well for themselves and their families, but they don't have that quote unquote piece of paper on the wall. And at the end of the day, when you go to pay for somebody something, nobody asks you what school you went to or what kind of degree that you had. Finally, take advantage of remote work policies. If you do have something like this set up, make sure you get that in writing. A lot of these companies are mandating that employees come back to the office. And a lot of people are in a financial crisis because of that, because they assume that because of the healthcare crisis that popped off in March of 2020, that their employer was going to let them work remotely in perpetuity. Now they're recanting a lot of that. So if you don't have anything in writing that you can push back or enforce, be careful of that, because you can really, really, really set yourself up for failure. So that's going to do it for this edition of the Kevin Strong Show. A little bit of a different video. I'm going to try to start posting more videos, more so than once a week, to get activity going with the channel. So let me know if you agree or disagree with any of these 15 recommendations. But like I'd say, I think it's a great idea, especially for you young folks out there, to take a chance at something. Try something that's 100% commission. Try a business. You know, I have a son who's getting ready to graduate when he's 18. And he's really getting into stock markets and talking about stop losses and volatility, implied volatility, and understanding stock patterns. And I'm like, I keep telling him, I was like, KJ, I'm telling you, at 17 years old, hell, there's 60-year-old people that don't know this stuff. So even if it takes you a couple years to learn this and you're losing money, so what? You're young, you're not married, you don't have any kids. It allows you to make some mistakes and not for it to be a death sentence. And people, as they get older, have more responsibilities with a wife or a husband and family and debt obligations, feel compelled to be weighted down by those obligations, and they're less likely to take a chance, and they end up settling on so many aspects of life. This is going to do it for the Kevin Strong Show. As always, keep your credit score up and your debt down. Take care. God bless, and I'll see you guys in the next one.